Bitcoin just printed new all-time highs above $125,000, but the real question this week is, can it hold? Ethereum is flirting with the $4,900 ceiling again, Solana is threatening to break $250, and ETF flows are back in force. This week's forecast covers Bitcoin, Ethereum, XRP, and Solana. We'll unpack what's really driving this market, where key support and resistance lie, and what traders should watch heading into mid-October. Macro and market context, why this week matters. The macro setup right now is surprisingly balanced, not too hot, not too cold. The August inflation data, PCE at 2.7% headline and 2.9% core, came in right in line with expectations. That gives the Fed breathing room after its September hawkish cut, a 25 basis point reduction paired with cautious guidance. The central bank wants more proof that inflation's easing before committing to more cuts, and that's why every economic report this month will matter to markets. Despite that caution, risk appetite remains alive. Digital asset ETPs pulled in just over $1 billion in new inflows last week. Bitcoin led with roughly $790 million, followed by Ethereum with smaller positive flows, and Solana again a standout, posting one of the strongest months for any altcoin ETF since launch. Add to that, the SEC's September 17th rule change now allows generic listing standards for spot crypto ETFs. That means new altcoin ETFs could appear without the months-long bureaucratic 19b4 review, and that's bullish for liquidity across the board. Bitcoin, testing the ceiling after September's correction down to the $110,000 zone. Bitcoin snapped back fast, closing above $125,000 on October 5th and setting fresh highs. Right now, the first layer of support sits between $117,000 and $120,000, which was the old resistance zone from August. Beneath that, you've got structural demand at $112K, $114K, and the deeper safety net around $107K, $110K. On the upside, if BTC can hold above $120,000, traders are eyeing $127K, $130K as the next magnet zone. Daily RSI is elevated but not extreme, and MACD remains positive, meaning there's room for continuation if volume stays real and not just perpetual driven. If price slips back below $117,000, expect a cooling phase toward the 20 and 50-day moving averages. But for now, ETF flows are keeping a solid floor under this market. Ethereum, consolidation before the break? Ethereum is still the slow burner in this cycle. After hitting highs around $4,950 in late August, ETH has been coiling between $4,300 and $4,600. Technically, the big resistance remains at $4,850, $4,950, and that's the line the market needs to clear for a breakout toward $5,200, $5,500. On the downside, $4,300, $4,500 is your support shelf, with $4,200 marking the boundary for a deeper pullback. Now here's the nuance: while Ethereum's fundamentals are strong, its ETFs saw $796 million in redemptions last week, the biggest outflow since launch. That's capped momentum for now. But the network remains solid, staking yields are stable, gas fees normalized, and institutional demand for tokenization projects continues to grow. If ETH reclaims $4,900 with strong volume, ideally spot-led, we could finally see that long-awaited push above $5,000. XRP, the waiting game continues. XRP remains trapped between $2.80 and $3.10, with repeated rejections near $3.10, $3.20. From a chart perspective, $3.10 is the make or break level. If XRP can close above that with volume and on balance volume rising, The next upside targets are $3.30 and $3.50. On the downside, losing the $2.84, $2.90 shelf exposes $2.70, $2.60, where buyers last stepped in. Fundamentally, XRP's position is improving. After full legal clarity in the US earlier this year and new ETF standards from the SEC, the path to institutional inclusion is open, but until the chart confirms, that's all potential energy waiting to be released. Solana, the institutional altcoin. Solana continues to shine as the institutional darling among altcoins. Its structure remains bullish, repeated defenses at $1.95, $2.05, clear pivots at $2.25, $2.35, and a breakout zone around $2.45, $2.50 that's been tested several times. A daily close above $250 would likely trigger a move to $2.60, $2.80, and possibly retest the all-time high range near $300 later this quarter. Sol's fundamentals are stellar: ETP inflows of $145 million in mid-September, growing treasury adoption, and an expanding developer ecosystem. The key: watch how Sol reacts if Bitcoin consolidates. Strong relative performance during BTC pauses is what institutions look for. Broader altcoins, rotation and selectivity. Rotation remains narrow. Liquidity continues to concentrate in BTC, ETH, and Sol. Most altcoins follow their lead. If BTC and ETH both hold their critical breakout zones, $120,000 and $4,900 respectively, you could see spillover rallies in L1S and DeFi tokens with real yield, but until that happens, exposure should stay light. Meme coins and microcaps might pop on headlines, but the risk/reward ratio remains poor in thin weekend books. Sentiment, optimism with a safety net. Market sentiment has turned cautiously bullish again. The sharp reversal from sub $110k BTC to new highs reignited confidence, but the scars from September's liquidation wave keep traders on edge. On social media, the narrative mix is BTC $130,000 next, ETH $5,000 soon, and Solana leading alt season. But the pros are focused on ETF prints, real capital flow, not hype. Fear and greed index readings hover near 70, optimistic but not euphoric. That's the sweet spot for range extensions before euphoria sets in. Trade plans: buy, sell, or wait. Buy if BTC holds above $120,000 and closes above $125,000 on strong spot volume. Target $127, $130k. Wait during any retests of $117, $120k, that's your reload zone. Cut exposure on a daily close below $117,000, that reopens $112, $114k. Ethereum. Buy dips into $4.3k, $4.5k only if reclaim is swift and spot leads perps. Add-on breakout above $4,900, target $5.2, $5.5k. Reduce below $4.2, $4.3k, channel break. XRP. Wait for a clean close above $3.10, $3.20 with volume. If that triggers, target $3.30, $3.50. Avoid chop between $2.8, $3.1 unless range trading. Solana. Buy continuation above $2.45, $2.50, aim $2.60, $2.80. Accumulate dips near $200, $2.05 only when BTC/ETH are firm. Step aside below $195, $200, trend shelf violation. Altcoins. keep speculative exposure under 5% until BTC greater than $120,000 and ETH greater than $4,900 hold for a full session. Stick with liquid majors or DeFi projects generating real yield, not hype tokens. Key risks and reversal signals. Flow shock. If BTC or ETH ETFs suddenly flip negative early in the week, breakouts could fail quickly. Macro surprise. Any hot inflation or hawkish Fed commentary could lift real yields and pressure crypto. Microstructure risk. Thin liquidity and elevated leverage mean any rejection near BTC $125,000 or SOL $250 could produce sharp pullbacks. Closing note. In short, Bitcoin's breakout is real, but fragile. Ethereum is coiling under resistance, Solana's leadership is intact, and XRP still needs a catalyst. The ETF environment remains your biggest macro tailwind, but keep stops tight, volatility always follows record highs. This is not financial advice, and I am not your financial advisor. Crypto is volatile and can result in total loss. Always do your own research, manage risk, and trade confirmation, not emotion. Like this weekly crypto outlook? Subscribe for clear, data-driven forecasts every Monday, and remember, trade smart, not hard.